Welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So obviously, title of the stream today, oil is in for a crude awakening. And as we have been discussing, I suspect, and the charts are confirming, all but inevitably, oil has reached a top. Is this a macro top? Is this it? Is this the next high before we go back into an oil bear market? I don't necessarily think that's the case. But let's go ahead and jump into oil, and we can take a look from there. So let's see what this chart's telling us. So just starting here, taking a look on the daily. The last specific time we had talked about oil being in a value area was when it came down and touched our 200 exponential moving average. Tagged it perfectly, was able to get back on top of the 8 and 21, and then we saw a nice little continuation to the upside from what amounted to that cross was at $68 roughly, and then we peaked out here at just about $86. So this is the US oil WTI crude chart. So then obviously we started to see some weakness. We came down here and found some support on our little green support line here, came back up and essentially put in a what amounted to a double top. We saw some clear divergence on the TJD TD MACD, and now here we have seen that the slope line has now rolled over. We've had only red histograms since then. We had a hard sell signal coming out of the bullish control zone before that on the jewel thief, and now obviously our stochastics are trending down. Now we have confirmed the 821 cross back to the downside, and you know, obviously we had mentioned how the Fibonacci from the bottom down here off the 200 exponential to the top of this little move up right here. Once we came down and tagged the 236, we confirmed that we could start Fibonacciing this move right here that we had confirmed a potential top was in. So all those things together with the double top and now taking out that previous low on today's daily close now confirms basically that we have a high, we have a low, we have a same high or double top basically, and now we have a lower low. So we're confirming that we are now entering into at least a short-term downtrend. Now this is on the daily, and we still have plenty of room to run. We'll see once this red slope line flips over on the TJD TD MACD. We'll oftentimes get a more powerful move down, an attempt to push back up, and then another lower high, and then see some continuation. So I'm expecting something similar to that. If we look back at the previous one, we basically sell off, come back up, put in a lower high, and then from that lower high, we basically confirm the red slope line flips. We see a pretty violent sell-off, attempt to come back up, and then we put in a lower low as well. So, it's pretty typical. These markets are obviously determined by, big money market makers, bots, algorithms, etc. So, they trade pretty textbook. There's not a lot of anomalies. Now, obviously, anything could happen here, but I'm expecting a similar move to take place. So, just kind of looking at some of our potential targets. Our first short-term target is going to be that previous high right here, which lines up almost perfectly with the 382. So I do expect oil there probably in the next couple of days. $75.32. But in all reality, a retest of the 618 and the 200 exponential and simple is more likely going to happen than not. So depending on when we get there and how long this takes, obviously the 200 exponential and simple are going to keep creeping up as we go. But I would expect somewhere around that 69, basically around $70 to $71 as a target there. Now I would expect obviously stair step along the way, potentially even a push all the way back up to retest our support as resistance once we break down from this yellow support line here. But in all actuality, let's zoom out and go to our next chart or our next time frame, and we can get a better idea of what we're expecting here. So obviously from our low back here, that pandemic low, April 2020, we had obviously a pretty big sell-off there, essentially when everything was shut down and there was all those issues. I consider that to be obviously an anomaly, but oil all but went to zero essentially at that point in time. That's obviously not sustainable. We had a pretty violent recovery, and on the weekly, we actually reclaimed the 200 exponential and simple right around the 4th of January 2021. So the beginning of January 2021, we were able to break above the 200 exponential and simple. We flipped the slope lines back over blue on those, and we confirmed that we're entering back into a bull market. We recently crossed the 200 exponential above the 200 simple here. confirming that we're actually in a nice trending move to the upside. And then we'll see, obviously, we're back inside the bullish control zone. We had multiple green histograms and reclaimed the blue slope line. But now what we're seeing and what we've been expecting, or should I say waiting for, has finally confirmed. So let's take a look at that, and we can kind of go from there. Matter of fact, yeah, let's go ahead and so we can clearly illustrate what I'm looking at right here. So we're going to pay attention to 3 key points that we have on this chart. And I think that's going to give us a pretty clear idea what we're paying attention to. So obviously this is the weekly chart. Just going to illustrate these really quickly, and then we can go through and take a closer look. So just give me one moment, as I did not update these on this current chart here. There we go. Okay, so what we're paying attention to here is, obviously, we have a high, that first little peak there. Then we have another high, which is higher than the previous one. And then, of course, we have a third high. So we have 3 highs, each one higher than the previous. So, a high, a higher high, a higher high than that. So now we have essentially confirmed that we have put in this third high right here, and we're coming back down. Now, is it possible we come back up and put in a 4th high? It 100% is possible, and I would not rule that out. But what I'm paying attention to now is that 1, we got the 821 cross on the daily to the downside. 2, we're clearly peaking, which what I pay attention to for like a temporary peak based on like just the candlestick or the pattern itself is, once we start to take out like the previous candle before it, and we start taking them out with red candles, which obviously at this point in time we've wiped out like the previous like 2 big green candles to the upside with this like series of red candles. So now if we go back down to our indicator oscillators, we will notice the divergence taking place. So here we have the first high, which is obviously the stochastics are up higher, highest. And then after that, we have a lower high than the previous high on the blue stochastic here. So that is giving us a drive of bearish divergence as price action has made a higher high while the indicator oscillator has made a lower high. So we've used less energy to reach a higher price, which tells us that this is unsustainable, the divergence between the price action and the indicator or oscillator, depending what we're looking at. And then now here, this is our third drive on the weekly. And again, we have put in a lower high. So we now have 3 drives of bearish divergence on our stochastics. And that's the jewel thief. And then obviously, if we look down here at the TJD TD MACD, we can see a similar signature taking place as well. So here we have our first drive. We have a lower drive for our second drive. We have a third lower drive here as well. So once again, 3 drives of bearish divergence as price action has put in a higher high on each of the successive highs. And our histogram has put in a series of lower highs. And, we obviously can determine the peak by looking at it and seeing clearly, it forms a peak or forms a high. But then we also have the histogram transitioning to red in each of these cases as well. So obviously once the transition goes to red and we see more than one of those histograms in a row, I consider that based on just this indicator right here to be essentially like a peak. So at this point in time, we have on the weekly time frame, triple bearish divergence on oil price action versus our jewel thief and our MACD. Obviously these are 2 different versions of them, but essentially that's what we're looking at. So what do we expect to happen after that triple bearish divergence plays out? Well, we would expect a, moderate to large correction. So based on what we're looking at here, if we just take off our drawing tools and just try to get an idea as to what we would expect for that correction, we know that on the weekly, once we crossed above the 200 exponential and simple back here, we were confirming once the slope flipped back over to blue on both those that we had entered into a weekly or longer term bull market based on obviously my own measures. And then obviously our indicator oscillators were telling us the same thing. As we were getting a hard buy, we were above the slope line and the slope line was blue. So now that we've put in triple bearish divergence, I am macro still bullish on oil on the weekly time frame, but I do expect us to get a reversion to the mean or something close to it. So we'll notice after the first divergence point was put in here, we got a powerful sell-off back down below the 8 and 21. But we're able to reclaim that area and continue to the upside. I do not think this will be the case this time. I think this time we'll get the full reversion to the mean which essentially will be a retest of the 200 exponential and simple. So depending when we get there, I would expect price action to reach roughly $57 to $60, depending on how long that takes. And then obviously once we get down to that level, we will have crossed the 8 and 21 to the downside as well. So we may see further downward or sideways price action. Now what we will pay attention to when we reach this point though is, does this support hold? Because if this support holds and when we get down to it, we stay above it or continue to, oscillate and then eventually start to move back to the upside, that will confirm that oil has in fact broken above its 200 exponential and simple moving average. It has retested them as support, and then we would expect continuation. So that's essentially an SR flip. Anytime we're underneath the 200 exponential and simple and they are red, or in this case pink, we would expect them to act as resistance and potentially a rejection and then continuation to the downside. But in this case, we have broken through them, and now this would be a retest of them, which if we can hold them as support, we would expect continuation to the upside. So in this case, obviously we have been oscillating around this range. We had this attempt right here back in, this was a cross above in 2017. We'll notice we flipped the 200 exponential blue, and then right around the end of that time, we flipped the 200 simple blue as well. And then once again, we get the reversion to the mean. We come down to it, but we're not able to hold that as support. So this is the retest, and then it fails. We then put in a lower high, and then we sell down to it, consolidate for some amount of time, attempt to push up, and then obviously this is the beginning of January 2020. We have basically a black swan event, turning off the entire economy. Obviously oil, you would expect to take a massive hit, but realistically everything did, at which point in time we see that capitulation event. So now this is the attempt of us to reclaim those levels. So now when we come down to here, is it possible that we fail and then continue and go back down? It is definitely possible. But at this point in time, because we have taken out this previous high right here, because we have flipped the 200 exponential and simple back to the upside, because the 200 simple is on top of the 200 exponential, I would expect this area to hold. So we'll have to wait and see. But in the meantime, I'm bearish on oil for a retest of roughly the high 50s or low 60s. And I would say that's with great conviction. So now if we just switch over to the longer time frame, let's take a look at what we're looking at here. And this is where we can really get an idea as to what is going on. So let me just zoom this out. Okay, so we'll see that basically, this chart goes way back. So we're talking about like 1980s essentially back here. So we obviously had a consolidation period, and then we resumed the uptrend. We had a very similar move to what I was just talking about on the weekly here on the monthly. So when we crossed above the 200 exponential, flipped the slope line over blue, above the 200 simple, flipped the slope line over blue. We came back down, had a reversion to the mean, retested that as support. It held as support, and then we went into a macro bull run. And that was essentially a retest back in 2002, and then oil peaked out in 2008. So we had a 6-year bull market in oil where the price went from $20 to $147. So obviously, we're talking about a 600% gain in oil, a massive, massive bull run. At which point in time we came down once again, had the reversion to the mean or the retest of the 200 exponential and simple moving average. We were able to hold them as support, came up and put in a lower high, consolidated for a period of time, and then broke down to a lower low. And then we went into a macro downtrend. So we have a high here, we have a lower high, we have a lower high, we have a low here, we have a lower low, we have a lower low. And now here we have done something for the first time since that trend took place with the top in 2008, which obviously was, the global financial crisis or, the mortgage bust. But essentially at that point in time, 2008 top, we now have taken out this third lower high right here. So if you just imagine, essentially a red resistance line right here, that is basically the top of those peaks. And now here we have broken above that peak. We came down and retested it as support and saw that continuation happening. So we're expecting potential move to the upside now. But what is likely to happen is, now that we've reclaimed the 200 exponential, we've reclaimed the 200 simple, and we have them both flipped over blue and to the upside, the 8 and 21 have crossed to the upside. This looks bullish on the macro monthly chart, especially since we took out this previous high right here. So that's where our next target comes in, which is going to be the high before that, which is roughly 113. So while long term, I think we get up to $113 to $115 and we retest this level as resistance, and then potentially after that, retest the highs and possibly all-time highs. I don't think that at this point in time, we're going to see that continuation to the upside. So now it is still possible on the monthly that we rally right here. We reclaim, some of this lost price action and, possibly can turn this trend around, move up, and potentially even put in a fourth tribe of bearish divergence or invalidate that divergence. But I think that's very unlikely. What we're seeing here is on the same indicator oscillators, we're seeing the stochastics are starting to roll over on the monthly. We're still very much inside of the bullish control zone, but we're at extremely high levels, like 94. If we look back at our previous top here, that was at 92.40. We look back at the top before that, that was at 89. And if we look back at the top before that, that was at 90. And then if we just zoom out and look what those tops correspond with, that was the macro top all-time high. This was our lower high top right here. This was the third top right here as well. So we see that each of these macro tops corresponds with the levels that we're at right here. So if this was our, all-time high, this was our lower high right here, and this was our lower high right here as well. The fact that we're above those 3 points right now, we're at a higher high, but we're at a lower high on price action, tells us that, essentially this trend once again is unsustainable. Now it's not printing divergence on the monthly between these 2 points, but it is telling us that we're at the levels where we would expect a macro sell-off to take place. And the previous macro sell-offs were from, essentially, these were big sell-offs. While I'm not necessarily expecting that to happen, this was a 73% sell-off in oil from the all-time high, from our, next point to the low. That was a 77% sell-off in oil. And then from this previous high to, let's just go down to like 18 because that was our closes. Obviously, it wicked down like ridiculously low, but that was a 75% as well. So while I'm not necessarily expecting a 75% sell-off or something close to that, I am expecting this to be at least a temporary macro high. So now what I want to see happen, if you want to stay bullish on oil or you are bullish on oil, what you want to see happen is this to sell off and then find some kind of support right around like 60, hold the 200 exponential and simple on the monthly as support, or possibly even oscillate around here for a bit in the high 50s or low 60s, and then put in another higher high so that we can possibly, we've obviously invalidated this high here. We're obviously at a high level, but this could essentially correspond with a sell-off back down, finding support around the 80 level here, and then continuing back up to either a lower high or higher high, either way. But we want something like this where we essentially get like a double top scenario, something like this where we get that double top scenario, or even potentially something like this where we roll over and then we get another push back up, essentially just continuation. But that is what I'm expecting. That is what I want to see if bullish is going, or if oil is going to stay bullish as well. So expect, in my opinion, something around a high 50 to low $60 a barrel crude in the near future. So that's my outlook on it. That's what I'm paying attention to. Right now we have still all green histograms on the monthly. We're well above the blue slope line, the zero line, and trending to the upside. We are obviously still inside of the bullish control zone, but starting to roll over. So I think this will come back down and bounce the pink Stoch right here, and also like that 80 level somewhere around there, and then we'll see another push back up. But on the weekly, we do have that triple bearish divergence, so it would not surprise me whatsoever to see a nice hearty pullback on oil, which would, from the top, just to retest the 200 exponential, is a 27%. Obviously, everyone has piled into the oil trade. It has had quite a bit of momentum, and now everyone's extremely bullish on oil, at least short to midterm, especially going into the winter months. So it would not surprise me for this trade to be exhausted and, see that cool down. Now, fundamentally, you could argue, well, oil's not going to go down because, whatever reasons. We're going to need more oil because winter months, whatever your argument is, more oil is not going to come online because of OPEC, et cetera, et cetera. But the fact of the matter is that this is not drawn, this price action in oil, this pushback up to the upside is not being propelled to the upside by supply and demand fundamentals. Like the excess, or should I say the deficit in supply to demand is very small at this point in time. It's very little compared to the overall supply. So more realistically than not, this is based on, speculation. And many people, including myself, obviously speculated on the oil play when it was clearly, well undervalued, when it essentially hit zero, negative, or in this case, just by closes like 19. So now what do you care? You're not trading oil. So yeah, okay, maybe my gas goes down a couple dollars. How does that affect everything else? That's the real question. And it's an important thing to pay attention to because oil does affect quite a few things, not just the actual price of like oil companies or gasoline. Obviously gasoline is clearly going to be affected by it. So if oil starts to sell off, gas prices will subside a little bit, which will obviously be nice, especially going into the holidays, travel season. But we may even see a lag with those, as the actual futures, or like oil trading may not matter in time. Thanksgiving's right around the corner. Christmas, obviously, just over a month and a half away. So maybe prices on actual gas at the pump are not even going to see the effects of like lowering oil prices. But potentially, things like natural gas are going to be directly affected. Obviously, the United States is not seeing the explosion in natural gas prices the same way that, Europe and England are currently. So it's not going to have as big of an effect on us, but it should alleviate some of that pressure for them in time. And then obviously fertilizers. Natural gas is obviously a key input in the production of fertilizer. So obviously fertilizer prices dropping is going to help out, a lot of consumable commodities like wheat and corn and, animals, obviously, as they're fed with, wheat and corn. So we should see like some of the alleviation on pressure with some of them as well. So again, this is going to fight a lot of the inflation argument or like the, CPI increases that we're seeing. So again, it's going to take some time to work out, but some temporary like weakness in oil or a temporary like pullback consolidation in oil should alleviate some of the excess prices, should obviously like further, like the agenda of the Fed and those that are calling for, the inflation to subside, at least to some degree. But overall, we can expect gas prices, natural gas, fertilizers, agriculture, all that stuff to slowly subside like the overall prices. Now, what is that going to do for some of the other commodities? Well, or stock prices? Well, obviously, things like gold, silver, going to see a decrease in production costs because they are, oil intensive in the sense that, obviously you have a bunch of big machinery, digging out rocks from the ground. So a decrease in the cost of production is going to increase profitability. So while we may not see a direct effect on the price of gold and silver and some of the other like, metals, commodities in the same way, the actual like mining companies or producers of those will obviously see, a reduction in costs, therefore, become more profitable. And most of their balance sheets are already in nice shape. They're also benefiting from our commodity run-up that has taken place over the last, year plus. So that could actually look very good for a lot of like these mining and, production companies. So that's definitely something I'm paying attention to for like the macro shift, as one could argue that while the miners had a nice run-up leading into all this, and many of the commodities did as well, that, the profitability and, arguably they're undervalued. So that's what I'm paying attention to. And then obviously, I talk about it all the time, but the way I look at, oil is it's the cost of production, the cost of doing business, the same way that interest rates are the cost of money, oil is the cost of production. So while we won't see the same reduction in costs or, reversion to like more of a reasonable level in costs for like factories and manufacturing and stuff like that, they should also alleviate some of the pressure on those producers as well, just for like any type of manufacturing. And then finally, we have like our transportation sector. Obviously, if you are a jet company and oil goes down in price, jet fuel therefore would see some alleviation, or, depending on what other transportation sector, if you're essentially like, let's say, for instance, like UPS or FedEx or something like that, obviously the input price going down. And then we also have things like, Uber and Lyft and, companies that are heavily reliant on oil because that's one of their like predominant, like larger costs of doing business. So we're looking for like those sectors and how they're going to be affected. And we would expect that to essentially translate into, if the oil prices continue to go down as I'm expecting, we should see like consumer discretionary, do well as well. So now again, we'll see. This is going to be a lagging effect. We could always continue to rally to the upside, but this is going to predominantly, in some ways, it's going to affect many different sectors of the market, and I'm paying close attention to it. But more realistically than not, we really just want to see how this plays out on the weekly. But it's definitely worth paying attention to, because again, I'm not bearish on oil, but I do think it's very realistic that we're going to start to see a little bit of pressure and basically like a little walk down to the downside, which essentially will alleviate some of the inflation fears, etc. So do I expect those immediate effects? No, probably closer to like after Christmas or something like that, as it will take time to work its way through the system. Even if oil continues to go down towards like those high 50s or low 60s, I think that we're going to actually see that play out probably towards like the end of winter, beginning of spring, like early into next year. So, but again, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But definitely worth paying attention to. So that is oil, U.S. oil, WTI, crude. So